Joining the global equity rally, Indian markets ended at a 4-week high. Sensex shut shop 742 points above to cross 65,600 mark, while Nifty ended with a well above 19,650 mark. The realty and IT stocks led sectoral advance. Hiral Dadia has more on this.
Benchmark indices actually rebounded in trade to end at a 4-week high. If you see the Sensex, a close of nearly 750 points coming in there, and you have Nifty 50, which ended near 19,675 levels. Now, taking Bank Nifty into consideration was well, it was in the positive, but clearly underperformed the benchmark indices in trade. The breadth was absolutely in favor of the bulls, and from a sector-specific perspective, if you see, it was IT as well as real estate that were the top gainers, though you had all the sectoral indices that ended in the positive. Real estate is an interesting one, and now whether the rally will spread over to the ancillary names is what we need to wait and watch. Let's quickly look at the top gainers in terms of Nifty 50. You had names like Eicher Motors, which traded at a 52-week high. Tech Mahindra, Infosys from the IT pack. Hindalco from the metal pack has been on a good run, and this is on the back of the way Novelis numbers have panned out, Hindalco numbers have panned out, and the trajectory going ahead is looking absolutely positive. Tata Motors, a 2.5-3% up move coming in there, and this is on the back of the Tata Technology IPO that we've been looking at. Talking about losers, Bajaj Finance, Power Grid, IndusInd Bank, Dr. Reddy's, as well as Cipla. These were the top losers in today's day of trade. Also, let's look at a few of the names that were in focus on the back of the MSCI rejig: IndusInd Bank, Suzlon, Persistent System, Polycab, Tata Motors, DVR. Macrotech Developers has been an interesting one also that we have been watching out for, as well as Paytm and Tata Communications. So these are a few of the 9 inclusions that we have looked at and were in focus. Talking about other newsmakers, Narayan Hridayalaya was one of the names that was up in trade, and this is on the back of earnings. Jayaprakash Associates as well was in focus today. Cipla was another one that we were watching out for. So clearly a lot of newsmakers in trade, but overall, whether this bull run does continue and for how many sessions is what we need to wait and watch. Back to you.
Meanwhile, the index provider Morgan Stanley Capital International added 9 Indian stocks to its emerging markets index in its November review. What do the additions mean in India? Here's BQ Prime Satya with details.
Right, so talking about that MSCI rejig, let's quickly talk about some names which were in focus on the back of that. You saw the likes of an IndusInd Bank. These are largely the inclusions which I'm going to start off with. IndusInd Bank, Suzlon, Persistent, APL, Apollo, Polycab, Tata Motors, DVR, Macrotech, and 197 Communications, which is Paytm, and Tata Communications as well. All of these were in focus on the back of inclusion into the index. Now, within this pack, you saw the likes of a Suzlon up 4.8%. You also had the likes of Paytm, which rose 2.5% which were buzzing in trade on the back of that. In terms of weight increases, there were 3 stocks which saw some weight increases. You saw the likes of a HAL, Vedanta, and Colgate with a slightly higher average or expected dollar inflow, as well as average volume, which were among those whose weights have been increased by the MSCI. Quickly moving on to the small caps, pretty much all of them were abuzz in trade today, so that's a positive. You saw the likes of a Gateway, District Park, Ahluwalia Contracts, Lloyd Engineering, DB Corp, as well as Prudent Corp, all of which were absolutely buzzing in trade. Among the exclusions also, we saw the likes of a Thermax, Linde India, Oracle Financial, Solar Industries, Jindal Stainless, and Dalmia Bharat, all of which were buzzing. Now, mind you, this is a very a critical MSCI rejig which has happened, because the India weight is set to move to 16.3%, which is an all-time high. It's almost twice the weightage that India had maybe 3 to 4 years back, and therefore this one assumes real importance. A lot of the inclusions and exclusions were largely expected, so nothing out of the blue, but nonetheless we saw quite a few names which are buzzing on the back of that.
With inflation easing in the United States and India, prompt the foreign investors to relook at the Indian markets. Well, emerging markets commentator Jeffrey Dennis believes the foreign investors should return to India despite relatively high valuation.
India has outperformed this year. It's up around 2.5% in dollars. The EM index as of now, as of a very nice move early on the 15th today, in Asia is up about 1.5% on the year. A disappointing year, frankly. But so India is up. So although The FII data has not been good lately. India has nevertheless outperformed. My sense is that you have had a perfect cocktail here for emerging markets. So you've got a very, very good mix of events here for the emerging markets. I think EM does very well into year-end and into 2024. And the FII money comes back, and I think India does well as well. I'd be overweight India. Of course, it's expensive, but then India is always expensive, and I think the growth story is great. There's potential down the road, perhaps for interest rates to be brought down as inflation drops. But at the end of the day, this is a good environment for EM, and that's going to bring the FII money, I think, back to a market like India.
As we approach the election season, what's the road ahead for Capex theme? Will the theme expand in the coming years? Dimension Consulting Ajay Srivastava shares why he is bullish on this sector.
Capex, we are very constructive. To be honest, quite a bit of our investment is in Capex themes and large MNCs in the Capex theme, and they're doing well because they straddle industries, they straddle petroleum companies, they straddle Middle East. At the end of the day, why do we look at India? We need to look at Middle East as well, where petrodollars are fueling a kind of boom if you travel around and see the expansion. So no, Capex remains our number one theme, of course, in this industry, in the Indian context, Indian market. We are heavily invested in companies delivering Capex, and more so, companies delivering Capex to railway sector. I think that's been our biggest portfolio choice, which has done well. So both defense and this, I think, are doing astoundingly well and will do well because government needs to keep spending money. Election year, they don't hold back the money at the end of the day. So next 12 to 18 months, it's a good time for Capex industry, no doubt in my mind. But this is a very niche industry, not more than 7-8 companies. And therefore, it's good in a way. You can build a portfolio, bad in a way that you don't have too many choices and the choices are expensive.
Moving on to the macros now, led by higher imports, India's merchandise deficit has spiked to a record high in October. The jump in trade deficit was largely led by a spike in gold imports. Pallavi Nahata joins with more details.
India's merchandise trade deficit has spiked to a record high in October, largely led by higher imports of oil and gold. The merchandise trade deficit rose to $31.5 billion. That's compared to $19.4 billion seen in September. While exports rose by 6.2% to $33.6 billion, imports rose by 12.3% annually to $65 billion. On a sequential basis as well, exports fell by 2.6%, whereas imports rose by 20.8%. Now, of the key imports, petroleum products were up by 8.1%, while imports of coal and coke were up by 4.5%. Imports of electronic goods were higher by 26.3%, whereas machinery, electrical and non-electrical goods were up 17.6%. Gold saw the sharpest spike and rose by 95.4% to $7.2 billion. Non-oil imports and exports are expected to moderate in November, given a higher number of holidays in the month. That's according to Aditi Nair, chief economist at ICRA. She also expects the trade deficit for November to come in anywhere between $22 to $25 billion.
In a move to finance long-term infra projects, two Kerala government-associated entities are planning to raise up to 2,500 crore rupees from the debt market. Here is Pragati Oberoi with more details.
After many bond issuances lately, we now have two Kerala-based entities looking to tap the debt market for fundraising. Sources told BQ Prime that Kerala Financial Corporation or KFC and Kerala Infrastructure Investment Fund Board or KIIFB are planning to raise about 2,500 crore. While both are looking to finance some long-term infra projects through these bonds, the timeline is very different. If we talk about KFC, sources told BQ Prime that it is planning to raise about 1,000 crore from a 7 to 10-year bond issue. It is expected to be in two tranches and the company may consider going for green bonds as well. The term sheet has been finalized and the credit rating is expected this week. As far as KIIFB is concerned, it is planning to raise about 1,500 crore from a 10-year bond issue. The final credit rating is expected soon and the issuance may hit the market by early next month.
All right, that's all the time that we have in this edition. News and updates continue on NDTV. Thank you so much for being with us.